Hello everybody, this is Rick with AmazingAccuracy.com and today is March 20th, 2023. It is currently 9:25 p.m. Chicago time. Okay, in this video I'm going to do something a little bit different. I'm going to be going over a few stocks that I am looking at. As a matter of fact, I'm doing more than looking at. I'm actually trading these using options. And first off, I want to make sure, in case you didn't read the disclaimer thing that I'm required to put up by the CFTC and all that other stuff, and that is that everything I say here, as far as trading is concerned, as far as you're concerned, it's paper trading. In other words, I can't tell you to buy or sell anything, okay? Anything you do at your own risk. I'm just going to tell you what I see, what I think, and you go from there, okay? Fair enough. I'll share some information, no cost to you, and you don't hold me liable if you decide to actually use real money to trade these things, okay? So I'm calling this paper trading for you, okay? So I think we have an understanding. All right, what we're going to start off with first that I'm looking at, and that's GE, General Electric. We got a one-day chart up here on General Electric. Let me show you what I'm looking at here. This daily chart here, we can see that it has been on a bullish run here for quite some time. And looking at these indicators that I have right here, I'm seeing this as pretty well cooked, okay? We got overbought here, but here's the thing. You notice how General Electric has been making higher strides here? Well, it's been doing it without the momentum behind it, all right? It's kind of like floating up on hot air. Let me show what I'm talking about. Here we have higher highs, higher highs, higher highs. And down here, using just a simple MACD, we can see that we are making lower. See, look, here's right here, we're lining up this vertical. You can see that here we have the crossover happening way up here. Then we can see it came down, and we can see that it is now crossing over once again, yet it is lower here than it is here. And I have put these trend lines on here so you can see that. As a matter of fact, let's see if I change the color here. Let's make it nice and bright so you can see it. Okay. All right. Yeah, just yellow should do it. All right. So if you see that, right here we got the RSI, same thing. Okay, we're over here above the 70 on the RSI back here. Okay, it broke down below its RSI moving average. It got very little done on the downside before it started to move back up, and then started just going across it up and down, up and down. But if you'll notice, the moving average in itself, just follow that path of that, and you can see that the value of the moving average here compared to here, it's lower here. Again, the price is higher here than here. In both these cases here, we can see that what we have here is bearish divergence. We have the price here moving higher while the indicators are moving lower. This is a bearish indication. You can call it a bullish divergence if you're going to be naming it based on what the price is doing. It's diverging bullishly. However, the real way to consider this is the implications. And the implications here is that this is showing us bearishness. It's showing us that price is moving up, and yet these indicators here, the relative strength and the MACD and the oscillator, all these things are saying, hey, there's nothing behind this move. Okay, so personally, I jumped in with a put option here, purchased a couple of days ago, and it's basically hasn't done a whole lot. Let's see, GE, overall I'm down, but the day is young. So anyway, the last 2 days have gone down a little bit, but as you know, with options, when you go long options, in other words, you buy one rather than sell them, then you have to deal with time decay. In my particular option, I have 32 days left on an April 21.85 put. So we'll see how that works out. But anyway, looking at that bearish divergence, that in itself tells me that that might be a good thing. And the reason why I'm in it is because we have the FOMC meeting coming up day after tomorrow. And anything could happen in these markets that are just teetering on going in one direction or another. And that's what I'm banking on with things like GE, that is just wallowing and going sideways. Let me take you over to the other application I have here, and that is my Provisions Charting app. Here we can see again the daily chart of General Electric, and we can see that we have this little wedge pattern going on here. But notice that the very high of GE had already gone into overbought territory. It pulled back down into oversold territory and is now just wallowing in between the two. I like to see this thing break down below that trend line. We can't always get what we like, but that's what I'm looking at. Also, if you take a look, momentum here is just been flattening out. And what I notice is that as price was moving up during this period here, and this is going from, what do we got here, from January, okay, all the way up to where we are right now, notice that we just absolutely had declining momentum throughout this whole thing right here. Even the MACD is showing declining momentum, yet the price of GE just kept going up. So this is just hot air as far as I'm concerned, and that has given us this bearish divergence. So I would like to see that play out. Here is the weekly chart, and again we can see that momentum topped out here. Weekly prices then moved up very strongly for the last 4 weeks. However, momentum did not go along with it on both the MACD and the momentum indicator. Take your pick, it really doesn't matter. But notice it also made it into overbought territory. It's now just been wallowing like this. I would like to see GE pull back down due to this, the fact that we have this divergence in play here. All right, so let's get back to the trading view and let's look at our next one, and that is ONON. That's your on holding AG. Don't ask me what they do. I don't know. These things come up on my scanner that I programmed into TD Ameritrade. I take a look at them. I look at the chart pattern. I look at the indicators, and basically I just go off of that. And as far as I know, they just make widgets, and everybody needs a widget, right? Okay, now this here, I'm considering this my YOLO trade. For those you don't know, YOLO, that's you only live once. And this is just kind of a play. I think with this one here, let's see if this is the one that I put on like a real dorky. No, this one here, I actually, this is a May 19th, 22.5 call. Okay, so I have a call on that one. And I just shut down my chart for nothing there. Let me put it back up. Okay. So anyway, I'm hoping to see here that, as you can see, we have this declining flag pattern here, flag pulls here. Normally what you see is you have the pole going up. If you have the flag going down, oftentimes you'll see breakout will be on the top side. That's just based on pattern probability. There's never any guarantee. But we are dealing with probability, okay? And as you can see, the MACD here looks like it's about ready to turn up. That's good. It might do it, or it just might keep floundering down below it and nothing comes of this. So if you note the call option I bought, it's cheap, and I didn't buy too many of those. And but basically, I'm looking at, if you'll notice here, an increase in momentum. You have here the momentum in the MACD here. You look at where price is here. Notice that price went lower here. However, the MACD itself, the histogram, did not go lower. This is called a bullish indication. However, it was not supported by the RSI, which is something that I would have liked to have seen. So in essence, I don't have that supported by anything else. So take that with a grain of pepper. Okay. But what I have noticed is that the RSI has moved over the 50% line. That's an indication of some strength building up. It has moved above its moving average. And if you'll notice that oftentimes when it does that, you get moves. So you get these moves on the upside, breaking above its moving average. And so going off of that, even this last move up here was because it moved up above its moving average. Really like this, very helpful. It's kind of giving me a heads up that we could see a move up here. Actually, we've already got a move up here. But again, YOLO, this is just a coin flip as far as why I'm going with it. But the thing is that there is a potential for this thing to pop come in the next couple of days. So would like to be sure that I'm there. I'm in it for the cheap. And now let's take a look at the, well, let me pull it up. That might be a good idea. Otherwise, what are we looking at here? MNOPQRST. There we go. ONON. All right, so you can see the flag there. We've already seen that. And then down here, we can see, okay, it's moving up. It's moving up with momentum. Momentum's moving up. So it is supported by momentum. That's nice. I'm basically looking at this thing as a possibility that we could break out above the flag. Who knows, based on what Jerome Powell says. There are other indications that this might be a good thing. This one here, I calculated to be a swing. The only unfortunate thing is that it made itself as an outside price bar. It has a higher high and a lower low, and that in itself makes it difficult to determine, will it be a higher bottom, or in the case here, will it be a lower top? I'm hoping lower bottom overall. Well, we'll see. And I will know what I want to do with this thing come after 2022. If it doesn't move in the direction I want it to, I will just get out of my option cheap and early. If it does go into profit really quick, I'll probably just grab the quick profit and get out. These option trades that I do, I'm usually in for a day or two for the most part, unless it's not a YOLO and it's something that has an obvious, good amount of time to keep going up, then I may just continue to hold on to it. But hey, if I can get a quick, get 5, 10, 15, 20% or more on my money, I'm going to do it. That always beats the bank. And these days, almost anything beats the bank, considering what's going on with the banks, right? Okay, and if we go over to the weekly, let's see what's up with the weekly. Well, not a whole lot. This thing has been moving in kind of a sideways little channel here. It's squished between overbought, oversold. It's been bouncing off of the oversold for some time. Currently moving off of the oversold. So we like to see if that carries on. By the way, if you'll notice, weekly prices move down here, momentum moved down, and then this recent slightly lower move down into oversold was not accompanied by lower momentum. It was an increase in momentum. I like to see this thing here giving us kind of a heads up that we could be breaking to the upside. It's hopeful thinking. Take it or leave it. We will move on now to, let's see, do I have any notes on the weekly before we move on? Oh yeah, it's just that it's a yay YOLO trade. Okay, let's move on to the next one. Next one I'm in is Oxy. All right. Now, here's the thing. Oxy has definitely been in this bear trend here, as you can see on the daily chart. And when it started to come all the way down here to the oversold territory, it just looked good for a call option. I decided to get in with a call. I have a time objective of 329, as you can see shown here. It may or may not. You know how that goes. But let me show you why I happen to like Oxy, at least some of the reasons why I like Oxy. All right, number one, we have here bullish divergence. You notice that as Oxy moved lower, the MACD, the RSI, and the oscillator here, whatever this weighted oscillator is, all of them did not follow suit. They held up really well, signifying to me that we're looking at bullish divergence. Then we can take a look at, hey, what's the news on this thing? Well, it looks like Warren Buffett, Berkshire, bought back more stock during the first 2 months of the year. And energy stocks, blah, blah, blah. Okay, so nothing else. So other than that, it's a Warren Buffett thing, I guess. I just noticed that just now. So anyway, for those of you who are interested in fundamentals, there you go. And let's see for the weekly on that. Let's move over weekly, see if I have any notes on the weekly. I don't have any notes. Matter of fact, that chart looks awful. Let's get it into view there. Okay, it looks like my little trend lines from the daily chart is bleeding over onto the weekly. Let me just kind of correct that. Visibility, current visibility only. Now we go back to the weekly. It should be gone. Well, most of them are gone. I didn't do these here. All right, so we see that we are bearish here. Everything looks bearish here, but we are in a oversold condition here. However, that doesn't mean it can't keep going lower. According to the weekly chart, it certainly can. We don't have any flipping up here. We don't have any divergences per se, nothing on the weekly. So this is definitely a short-term play for me. It's all based just on the daily itself, on these divergences, and just looking for that short-term play. Like I said, get a couple of days or so of profits. I'm going to look at see what's going to happen on the 22nd. And after the FOMC meeting, we'll know for sure what's going on. And again, taking a look at Oxy over here on the provisions charting software. Interesting enough, we do have the bullish divergence showing here on this MACD. Notice that the last low was indeed in oversold territory. It rose up into overbought, short-term overbought. That's why the width is so small compared to this longer one up here. And I'd like to see, we might get a push back for a day, maybe two, but then I'd like to see this thing take off. I don't believe it will go back into oversold twice. I believe this is it. And we have some indications here for 321, 322. We have some more coming up for the 328 time period. I know we got 327, 320, 29, so 320 is right there in the middle. I just use that one. So these are just indications that I have here to look for the potential for Oxy to move up. And, all based on oversold, all based on bullish divergence. I'm going with it. That's what I like. All right, let's move on to the next one. And the next one is Pepsi. Now, Pepsi has been very good to me. I got into Pepsi, as you see the little flag here, I got into Pepsi a few days ago, and I bought a call option in Pepsi. And the one I got here, let's see. Okay, so we got the May 19th. I got a 180 call. Okay, so that one's up really nice. Looks like it's 0.875 it's showing here, so not too shabby. All right, so call options on PepsiCo. Now, my decision, I don't know why I keep knocking that thing off. My decision to get into Pepsi is pretty much that we have a turn up in the MAC. We crossed up again on the RSI over the moving average. We're above the 50 line here. Very bullish. We crossed above the Keltner, momentum Keltner channel here that you see on the chart. And I like to see that. You can see oftentimes when I break above that and it turns green, hey, it has a pretty nice distance move there. sometimes they'll break above it like here and it'll be very short term, but it's very rare. And usually what you want to watch for this particular indicator, uh, which by the way is not available on TradingView. I coded this in using the Pine editor. But if you'll notice here that if that green channel is curving upwards or moving upwards, that's when it's really significant. You can see it right here. Here it was moving downwards. That's kind of an indication, hey, that may or may not play out. But notice it has curled up here. So it acts kind of like a cycle thing. And so that's likely cycling up. And today was a good move. Let me pull that. You can see right there today. I had to withstand a couple of days moving against me last week heading into Friday. But I'm glad to see that it didn't retreat back down. It did break up, and I believe it will likely break above the high here, the 178.09 area here, and continue up. There's still upside on the RSI available. There's upside on the MAC. Definitely, well, here's the RSI, here's the oscillator. Okay, I'm getting them all confused. Anyway, so that's that. Now, going over to provisions charting here. All right, we can see that in provisions charting, price is in the overbought territory. Now, let me explain something here. Usually what happens is price will move into these territories once. It'll move out, go to the opposing side, the oversold once. Then when it comes back into the overbought, it will usually then break to new heights. So very rarely do I see price go in overbought, come out, go in overbought again, and go back down again. Very rarely, and the same goes for oversold. So you can see here that it wasn't overbought back here, Feb 27, came out when it's oversold at the time, went back in, and it hit, came back for just the day, and says, nah, you ain't holding me back, and now it is plowing right through it. So this one here is now in play as far as PepsiCo is concerned because it has yet to go into this realm, and that's over there in the 178 and above for PepsiCo. So again, playing this for the short term, and it's already given me some good percentages on my investment, but I believe it still has more ways to more room to go. I'm going to let it go. Then there's this little thing TradingView gives you here. Let me get that there. There we go. And we can see, let's see, Staples surge, turmoil rises. So we can see that there's good news for consumer staples. Okay. And Pepsi is, of course, a consumer staple. And so there's some bullish news that has come out today. And then we, of course, saw Pepsi move higher today. Anyway, so that's another stock that I happen to like. Now, all these stocks that I'm showing you, please keep in mind, these are not buy and hold long-term or sell and hold long-term. These are quick plays for me personally. I don't trade the stock itself. I trade the options on the stock. If I'm bullish, I'll buy calls. If I'm bearish, I will buy puts. And as everybody knows, when you just buy puts and calls, what really works against you if the market doesn't make some decent moves is time decay. So there are ways to alleviate some of that time decay. And how you do that is you buy more delta and you buy more theta. And if you don't understand the Greeks, the delta is how deep in the money you go, the higher the delta will be. And I like to get in, most of the time I like to get in, at least 60 or more delta. I like to, time-wise, go out 60 days if I can, 50 days, 40 days, just usually anything beyond the 35 days I like to buy. Where you really get eaten up with theta is after you come into the 30-day period. Then it really starts to work against you really fast. And the only way you can work against that is the market really needs to be huffing and puffing in your favor. So keep that in mind. I'm not going to be teaching options here. If you don't know it, I would really highly recommend that you really get to learn about them, because it helps you to decide which ones to buy. You know, how deep in the money, how far out in time. There are a lot of factors. And another thing too is be careful with volatility. During high volatility periods, which none of these are in a high volatility period right now, but during high volatility periods, options become more expensive. And remember, high volatility always follows low volatility, and low volatility always follows high volatility. You go and buy an option, you go long an option, whether it's a call or put, during high volatility. Well, what comes after high volatility? Low volatility. Once the volatility drops on an option and you're still holding it, you bought it during high volatility, it's going to lose a lot of money, even if the market is moving in your favor. Keep that in mind. All right. So that's my trade here in Pepsi. I like Pepsi. It has already started the move on that. There is still a little bit, I believe, but this one here for those who are paper trading, it would have been better to have gotten it back when I did over here, but there may still be some good. We have to see how it reacts to resistance at 177.59. As you can see marked here, we need to close above that to start targeting the next level up here, 183. Okay, so let's see what happens in the middle of this week, right? Now, do I have anything on the weekly for that? Let's take a look. Just that it is found support on the bottom of the channel here. And if it breaks and closes above this channel here, we'll see a change from red to green. But right now, you might say I'm counter trend trading this. We don't have a MACD curl up yet, although we can see by momentum itself increasing that it does have the potential to cross up on the MACD. I just got to jump on it, get some early coin out of this thing. And also you'll notice that the RSI is above the 50 and has crossed above its long-term moving average. So that bodes well for bullish Pepsi. And let's see, what else do I have anything here? Okay, well, I'll show you this thing here. On the weekly chart of Pepsi, you'll notice that it had gone oversold weekly time frame. It did go overbought, came back, touched it again, and now is in the overbought again. That's why I like it to break out of this, because it's already been here once before. I like it to break out of this, continue moving up, potentially up to the next level here, which is the 181.36 area, which just happens to be right up there in the next resistance that I showed you on the other chart. So that actually looks pretty good. And I also have a possible turn week time frame around April 21. So we could see it continue on until that time. Whenever I calculate these potential turn dates here, there is really no way of knowing whether there'll be a top or a bottom, except for the fact that the way I use them is not to determine how long a move will go until it reaches it, but rather when price is already at that time, I would expect it then to turn direction. And that's basically what I use it for. I don't trade towards a date, I trade away from a date. And yes, this one here definitely a swing bottom, and I am looking for PepsiCo to move higher. All right, let's go to the next one here. Okay, we got a couple more to get here. Video's long, but I'm giving you a lot of stocks to take a look at here. This one here is called Pfizer, PFE, Pfizer. I don't usually like to trade these pharmaceuticals because I kind of have a love-hate relationship with the pharmas. But let's see, we got the weekly showing. Let me get the daily on here. Okay, let me reset this chart so we can see it better. Come on, let's get up here. All right, and we got a little indication here. This is where I got in. I had purchased a call option in this thing a few days back. And again, you can see that Pfizer was making lower bottoms, as you can see here. However, it was not followed by lower bottoms in the indicators themselves. We can see that we have bullish here divergence, bullish divergence here, bullish on the histogram here, bullish on the RSI, and we had a cross up above the moving average of the RSI right here at this bottom. We have yet to cross the 50 line on the RSI, but once it does that, it's probably going to do that when Pfizer gets up to this channel here. If it does do that, we've got good relative strength. So far it's a little on the early side. I tend to get a jump on things early. That's the whole point of timing bottoms and tops, is to get a jump on things. It lowers my risk. And it also, of course, gives you a little more profit potential because there's more room to the upside. Anyway, if we see this thing go up to here, we can see it cross above. This puppy start to turn green on me. And I can see it's starting to do its little cycle loop-de-loop here. It usually takes a little while to make the little U-cut bottom here with the indicator. But by then, I can see that we're already up, crossed up on the MAC. We can see that we'll likely see the histograms moving up and everything. Everything is screaming positive to me. As far as the coin, let's see, Pfizer, I'm up. Good deal. So, all right, on provisions charting here, we can see that Pfizer came down, didn't quite meet oversold, which is actually bullish because the bulls kind of got in there before it could go really extended to the oversold zone. We see momentum slightly ticking up, but down here MACD momentum showing some increase. It turned up, but we already saw that on the trading view charts. And right now we are in overbought. But see, we were in overbought before. The second time, I like to see it broken, go up to the next level. All right. And as far as levels are concerned, back here, okay, our first target 41.45, second target 42.70 in the Pfizer. Those are what I'm seeing. The first two resistance areas are the targets. And weekly on this little gizmo here, did I put anything on here? Yes, I did. Okay, so here we can see that we have this lower weekly bottom here. However, we can see that it was not followed by this indicator here. It was followed by the RSI a little bit, not much, but the MACD was flat, okay, double bottom flat. It's starting to move up here. It hasn't crossed up. This is long term. I'm short term, so I'm anticipating that we're going to keep moving up. And it seems like we got some news here. What kind of news? Okay, Moderna expects price its. I'll let you read that yourself. I don't want YouTube to demonetize me. Oh, wait a minute. These videos aren't monetized anyway. Ha! And it says here the VAC, okay, at about $130 a pop in the US. Can you believe the nerve of them? The Minerva of Moderna. All right, so anyway, that news apparently coincides with the recent bump up in price and weekly prices of Pfizer. I can see that this thing could be moving up really nicely, going up above 46, and so I am in that one as well. Okay, the last one is DOCN, that's DigitalOcean. Not a lot of information apparently for DigitalOcean on the weekly. Goes back to April 21. Let's see if there's more data on it, or Maybe they only IPO'd it back then. I have no idea. Like I said, I don't look at the fundamentals. But we can see here that it has been pretty much trading below the band all this time. But then recently you'll notice that it has now moved into the band. The band's flattening out. We've got a turn up on this oscillator here. We've got a cross up on the MAC. We had a cross up on the RSI, and it's above the 50. I kind of like that for a possible play on this thing. However, what I did with DOCN is, I believe this is the one that let's see, that would be a different account. Let me go to a different account. There we go. This one here, yeah, okay. This one here, I bought it at 30 cents. So this was just kind of like, you know, you got some extra coin in your coin jar, right? And you're thinking, hey, you know what? This could you know, possibly do a nice little pop come the FOMC meeting. And if so, we could see this is actually it was a May 19th, so I bought 60 days, so I'm really good time-wise. However, I only picked up the 20 put. The 20 put? I bought a put? No! No, I didn't. I did. Oh, this is the weekly. Whoa. Oh! Okay. All right. You know what? And I'm gonna probably leave this into the video. If you hear me saying this, I left it in the video. Boy, I tell you, you know what? What a rookie mistake there. Well, I mean, anyone could have made this mistake. Okay, yes, I bought a 20 put, 30 cents, 30 cents, and just picked that up today, as a matter of fact. So it's still 30 cents. But the thing is I bought a put, and so now we're looking at the daily chart here. The weekly is what we were looking at, and the weekly is, I mean, the weekly is bullish. The weekly is definitely bullish, right? I mean, that's what I see as bullish. So what am I doing? This is just an FOMC play for this week because of the volatility I expect. And the reason why, if you'll notice here, that the RSI has been making these lower peaks, whereas price has been making higher peaks. Okay, this is bearish divergence here. And we have this cross down. You can see it's red here. So we have this cross down in the MACD. So I'm looking at this as a bearish flag. You can see here's your pole, and then this is your wedge. If I was to draw this in for you, okay, you've got that across the lows, let's say. Well, let's get that in there. All right. And this is across the top here. All right. And so this one here comes down, cross, and then down. If you're going to play off of that, and you can see here where it just kept going and going and going, and this thing's going higher and higher. Now the fact that it's going higher and higher and higher is actually more of a bullish indication. It's making higher highs and higher lows. However, I'm playing the relative strength, and the relative strength has been going bearish divergence, and it's now below the moving average here. It's still above 50, so it's still bullish, but I'm looking to see this thing possibly break down. You know what it might do? It may break up, and ooh, I'd lose 30 cents. So anyway, this is just a fun one for me. This is not like a real serious one, but I'm sharing this with you anyway. I mean, even if you look at my Keltner band here, even that's bullish. Even though this thing is kind of getting narrow and everything, I'd like to see it pop down, possibly down to 28, and and then I'll just get out. And let's see what kind of news we're looking at here. The revenue grew, provides blah 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 blah. The new stake, whatever. Okay, got a new CEO and all that stuff. So anyway, we'll see what happens with that. Of course, now as you can see, not real serious about DigitalOcean holdings. All right, so keep that in mind. This is not a serious one for me. And if I was to look at it on the, okay, I'll give you some numbers if you're interested here. All right, here's the daily chart of DigitalOcean. So we've got 321, 322. We already know that's the FOMC meeting, right? So obviously the calculation comes up with the same exact date that we got a meeting. Is it a coincidence? I leave that up to you. It just seems like a lot of times I calculate with mathematics what the turn is likely going to happen, and then it always seems to coincide with some kind of event. Just wish I knew in advance what the events would be. But in this case, it would be the FOMC meeting, right? That's kind of obvious. You got another one for 328. You got another one for 44. And we got one for 411. You can write this down if you happen to be interested in DigitalOcean stock. And then just watch what it does. These notes will be up here. So as time goes by, we can always go back and look at them. All right, well, I think that's it. I've covered GE, ON, OXY, PEP, PFE, and DOCN. Those are my stock picks, my stock trades, and well, we'll see how they do, huh? Anyway, thanks for watching. I hope you found this somewhat informative and entertaining. If so, and you haven't done so already, please subscribe, click the notification bell, and give me a thumbs up, please, so that the algorithm will help the channel out. And I'll see you in the next video. Bye.